Good morning and welcome to the morning call for Friday the 17th of March 2017. Very quickly, just want to run over a few things that are probably likely to sort of filter into your day today. Yesterday was very interesting around the Chinese. They were actually caught quite a lot of people off guard with raising rates by 10 basis points across their repo rates and around about 15 across their margin lending rates. That wasn't expected. It is their second movement for 2017. So be aware that does show signs that maybe the PBOC is going to actually try and normalise monetary policy outside any sort of changes from around the central government around policy. So with that in mind, therefore, you may actually see that moving with any form of moves from the US, and it clearly looked like a reaction to what happened from the Fed. It did throw a bit of a spanner in the works also in the futures markets over in China. So having a look at Dalian futures, they did all of a sudden fall out of bed. They lost 2% after being quite strong and up quite nicely. They really did fall out and end up being down. However, in saying that, have a look at the spot price. It actually increased by 1.8%. So a bit of a disconnect there, which is really interesting because it also was probably the reason why the ASX really fell out of bed in the back half of yesterday. You saw on Tuesday a really powerful move to the upside on the back of those futures markets. Then yesterday it sort of did the same thing. So shows you how correlated it is at the moment and where the money is flowing to. Money is clearly flowing to the cyclical side of our market, and that is actually adding the points or taking the points away. So just something to watch very, very closely. Also wanted to show you over my left-hand shoulder, again, the Aussies a really interesting sort of technical inflection point. Having a chat with Gary about it today, he agrees. We just cannot hold 77 US cents. And although we've got really good signs from a fundamental point of view, and you have a look at the current account, trade surplus, GDP, etc., it's just not enough to really hold that level. So that may be something to be aware of. It may be something to sort of really look at from a trading perspective, that 77, if we go above it, is there reasons to push higher, and will that actual break of resistance be held? If it's not, maybe it's a signal to look as well. Being Friday, I do always like to look to next week. There isn't a huge amount of actual major news in terms of any sort of macroeconomic data. It is a fairly big week in terms of reports coming out from central banks. So on Tuesday, you get the RBA minutes. You also have the RBNZ on Thursday doing their rates decision. You get Fed minutes from the Fed. You also get Janet Yellen speaking next week. So they're probably what will push currencies around, maybe put the impact on there. There isn't a huge amount of corporate data out of the US or here in Australia next week either. So that also is quite interesting. So we're in that period at the moment where it is dividend season. You've seen around about 22 billion Aussie dollars returned to shareholders, yet the volume hasn't really returned yet. Something to be very much aware of. You've also got a scenario where leading into April and May, they seasonally are one of the sort of the weaker months around, and they tend to sort of see, on average, over the last 5 years, a decline between 1% and 3% across both months. And that's also something I'd probably start thinking about and maybe start looking towards the next sort of couple of weeks as we move into those 4th and 5th months, which tend to be quite a dab sort of trading period. Have a great weekend. Have a good trading day today. Look forward to speaking on Monday. And yes, very interesting period at the moment.